Yeah, only those topics which we are covering in this revision in this 4 days, that book is limited to that. Yeah, we are about to start, okay? All right, so shall we continue? Hello, are you all back? Very good. So friends, we will start with the next concept that is said to be what? Perquisite. Okay. So friends, tell me, what do you mean by perquisite? What do you mean by perquisite? Come again? Amount given in kind. Okay. All right. So, if you go take the institute study material, the first paragraph itself says perquisite can be monetary as well as non-monetary. Then you tell me what is perquisite. Benefits. Then what is allowance? Additional benefits. Allowance means fixed monthly sum given by the employer to the employee, irrespective of actual expenditure incurred by the employee. Employer don't care whether employee incurs that expenditure or not. Every month he will pay a fixed amount that is called as allowance. How about perquisite? Either the employer will give him a benefit or the employer will reimburse the actual cost or a portion of actual cost of the employee. That is called as what? Perquisite. For example, say house rent allowance. In the morning we have covered house rent allowance. Every month a small amount is given to the employee and that small amount can be called as house rent allowance. The house can be provided as a perquisite also. Either the employer will construct a house and give it to the employee, or the employer will take a house on rent and give it to the employee, or the employer will reimburse the actual rental expenditure of the employee. That is not HRA, that is perquisite. House rent allowance means fixed. Perquisite means either the actual expenditure will be reimbursed by the employer or it will be taken care by the employer. So it will always have a nexus when it comes to perquisite with the actual expenditure of the employee, and in allowance there won't be any nexus. Are you with me? Fixed monthly sum is allowance. Providing the facility or reimbursing the cost of facility is said to be perquisite. Are you all with me? So when it comes to the income tax department, we can divide perquisites into three. We can divide what, friends? Perquisites into three. Let's understand which all are the division. Number one, perquisites taxable in the case of all employees. So what is the first category? Read along with me. Perquisites taxable in the case of all employees. There are certain perquisites which are taxable in the case of all employees. Number two, perquisites exempted from tax in the case of all employees. There are certain perquisites which are exempted in the hands of all employees. And what is the third category? Perquisites taxable only in the hands of specified employees. That means certain employees only are subjected to pay tax for the perquisites under third category. Are you all with me? So which all are the three categories? Repeat with me. Number one, perquisite taxable in the hands of all employee. Number two, perquisites exempted in the hands of all employees. And number three, perquisite taxable only in the hands of specified employee. Which all are the exempted perquisites? The list of exempted perquisites have been given as a table over here. I'm not about to discuss the table. Rather, we will take each perquisite and we will discuss its different permutation and combination. So you can see a lot of charts are coming. These are all perquisites and benefits. Okay, say for example, residential accommodation. We say rent-free accommodation. Then motor car. Like that, everything will be discussed as chart. A list have been given as table as well. Let the table be there. We will start with the first exemption or the first thing related to the perquisite. Can you read the heading? Section 10 subsection 1, that is exemption in respect of leave travel concession. Listen. Say for example, you should respond, okay? You all should respond. We have around 1.5 hours of classes now. I mean, approximately, okay? Approximately 6:30 doesn't mean sharp 6:30. It will be 5 minutes more or 5 minutes 5 minutes even more. depends upon the percentage of completion. Okay, it is either 5 minutes more or less, depends upon the, is that okay? Oh, all right, fine. So depends upon, if we will be able to cover the topics earlier, then I'll leave you earlier, but I'm sure that 99.99% case it won't be happening, but our purpose is to crack the upcoming examination. So I hope you understand. Okay, now friends, listen, already we have the experience. Okay, you have already trained, right? Maybe 6:30 and it has been extended to 7:30 and all. Super. No, nothing, man. Understood. Now listen, 7:30 and all, I have no plans to take. Okay, yesterday also it was being the last day, they might have been taken to 7:30. Don't worry, I have no plans to extend till 7:30 because I'll die. Don't worry, whether you die or not, I'll die, that's for sure. So listen, coming back to the point, friends, we will be planning to wrap up within 6:30 itself. Okay, that's our plan, but let's see. So listen, friends, say for example you are my employees. Are you all listening? By making use of this example, you will understand the entire concept. Okay, listen. So you are my employee and I am giving you an offer that you can travel anywhere in India. You can travel anywhere in India and I'll take care of your traveling cost, your food and accommodation and the other expenses involved in relation to the travel. Who am I? Your employer. Are you all with me? You are my employees and I'm giving you an offer. What is that offer? You can travel around. You can travel around anywhere at your wish. No problem. I will take care of your traveling cost, food and accommodation and other expenses in relation to the travel. Are you all here? I am reimbursing the entire amount or a percentage of the amount of that you have actually earned. You tell me, are you getting any benefit? Are you getting any benefit? Of course, yes. What is that benefit? You don't have to spend anything for the travel that you are doing right now. Are you with me? You don't have to spend anything because I'm sponsoring the travel. Are you all with me? It should be considered as a perquisite, a benefit. But departments say you can claim an exemption under section 10, subsection 5, subject to certain conditions. Are you with me? If you are going for a travel within India and your employer is either sponsoring the travel or the employer is reimbursing that actual expenditure, in both the cases, subjected to certain conditions, you can claim an exemption under section 10, subsection 5. So let's understand what exactly is that particular exemption. Now, can you read that first blue box? Voice is not audible. So, friends, please tell me, am I audible? Yes. Okay, great. So listen, can you read the first blue box? What exactly is that? This exemption is available to an individual in respect of travel concession or assistance for himself or herself or for his or her family. Either you yourself or along with your family are going for a travel. Okay, you will get this particular benefit. And what is point number 2? This exemption in all cases will be subjected to the amount actually spent and limited to 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. Are you all with me? First thing that you should understand here is that calendar year block is fixed. In a block of 4 calendar year, you can perform up to 2 journeys, and for that journey, whatever traveling cost reimbursed by your employer is not considered as a taxable perquisite. Are you with me? In a calendar year of 4 years, you can perform up to how many journeys? 2 journeys. If you're performing 3 journeys, all the costs related to that 3rd journey shall be fully taxable. If you are performing 2 journeys, all the costs are not exempted. Only the traveling cost you can claim an exemption. Food and accommodation and other expenses reimbursed by the employer shall be fully taxable. Are you with me? Are you with me? This 10 subsection 5 exemption is eligible only for what cost? Traveling costs. That too within India, not for the other associated costs. So, let's understand this by way of an example. Say, for example, listen. As I've told you, this particular block is actually fixed. So the one thing that you should know, say today I'm joining a company. Okay, what is today's date? 21st July 2024. Are you all with me? Your block is not starting from 21st July 2024. You are entering into a fixed block. When you join in a company, you are entering into a fixed block which starts from 1986. So what is the first fixed block? 1986 to 89. 86, 87, 88, 89. Then 90 to 93. 94 to 97. 98 to 2001. 2002 to 2005. That is 2, 3, 4, 5. Then 6 to 9. 10 to 13. 14 to 17. 18 to 21. 22 to 25. So you are entering into this 20 to 25 calendar year block. Calendar year, not previous year. Are you with me? Yes, I have written everything for a better understanding of the topic. Okay. So when you are joining on 21st July 2024, you are entering into this particular fixed block. In this block will get over by 31st December 2025. So from July 2024 till 31st December 2025, you can perform up to how many journeys? 2 journeys. And you can claim exemption for the traveling cost. Are you all with me? So the one thing that I should understand is that that block is always fixed. When you are joining in a company, you are entering into a respective block. And the block which is applicable for our PY is 20 to 25 because our PY comes in between 20 to 25. Is that clear? Block is not a financial year. That's why I've said calendar year. Okay. So read this. Exemption in all cases will be subjected to the amount actually spent and limited to 2 journeys performed in a block of 4 calendar years commencing from the calendar year 1986. So the block is not financial year, it is calendar year. Now friends, listen. Where such travel concession or assistance is not availed by individual during any block of 4 calendar years, one such unavailed leave travel concession will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. Say for example, I joined in this day, today. Okay, due to work pressure, I was not able to perform any journey. I can perform up to 2 journey, but I was not able to perform any journey due to the work pressure. Are you all listening? In that case, what I can do, I could have performed 2. Out of that 2, I can pick 1 and carry forward it to the next block. You tell me which is my next block? 26 to 29. Yes or no? In 26-29, I can now perform up to 3 journeys. Are you all with me? In 26-29, I can perform up to how many journeys? 3 journeys. So, if you are not performing any journey in a block, then out of that 2 unperformed journey, I can carry forward 1 to the next block. Then let me create another combination. Say I have performed 1 and 1 is pending. Then what to do? Can I carry forward that to the next year? No. If you have 2 unperformed journey, out of that 2, 1 you can carry forward to the next year. Next block? Are you with me? And say I haven't performed any of these 3 in the next block. Then what shall I do? Again, only 1 I can carry forward to the future block. Are you all here? So, whenever there is unperformed journeys, if you are not performing any journeys in a block, you can take 1 and carry forward to the next year or next block rather than the year. I hope it is clear. So, we will read that again. Read along with me. Where such travel concession or assistance is not availed by the individual during any block of 4 calendar years, one such unavailed leave travel, LTC means leave travel concession, will be carried forward to the immediately succeeding block of 4 calendar years and will be eligible for exemption. So 3 things we have learned. Either you yourself or your family members can go for this and enjoy the benefit and claim the exemption. Number 2, you can perform up to 2 journeys in a block of 4 calendar year. Number 3, that particular in a block, if you are not performing any journeys, then you can carry forward 1 out of that 2 to the immediately succeeding block. Are you all with me? Moving on with note number 1. Can you read note number 1? Spouse or children of the individual and parents, brothers and sisters of the individual, or any of them wholly and mainly depend upon the individual. That simply means here we are giving a reference of family. What do you mean by family? Your spouse and children. Then parents, brothers and sisters, if they are wholly depending on you. Spouse and children, whether they are dependent or independent, you can take. It should be your spouse, okay? It shouldn't be someone else's spouse, okay? Your spouse and your children, you can take, no problem. Whether they are dependent on you or not. But parents, brothers and sisters, you can take and claim the exemption only if they are depending on you. Now, and there is another thing. There is a restriction for the number of children that you can take. Can you read this? The exemption referred to shall not be available to more than 2 surviving children of the individual born on or after 1st October 1998. Listen. Say for example, if you are a person having 5 children. Okay. Say for example, I'll take an example. So listen. Alright, here, what's your name? Ashwad. So I'll call him Ash. So Mr. Ash have 5 children. Okay, Mr. Ash has 5 children. And say we will take 8 children. Okay, we will take 8 children. 5 children born before 1st October 1998. Okay, I think his date of birth is after 1998 maybe. Or before 1998. Okay, doesn't matter. Okay, so he have 8 children. Now we got the reason for overpopulation, sir. Oh, Thiru. Okay, or 10 years kapro, nama onnu paakano, okay. 10 years kapro, ipdida sollanam neeyum. So Thiru have decided not to have babies. Why? Because he believes that India is overpopulated. So he's sacrificing. Okay. Thiru, don't get married. Now, listen. They have 8 children and 5 before 1st October 1998 and 3. Okay, Sarah. Okay, da. Okay, no problem. So 3 children where came, that means born on or after, came means born, okay. On or after 1st October 1998. Are you all with me? So how many children Ash have? 8. 5 before 1st October 1998. 5 born before 1st October 1998 and 3 on or after 1st October 1998. Now listen, he took everyone and went for a Delhi trip. Okay, he took everyone and went for a Delhi trip and came back. Now, when you claim exemption, you can claim exemption for the traveling cost of these 5 children. Absolutely no problem. Why? Because they born before 1st October 1998. Absolutely no problem. But when you are claiming exemption for the traveling cost of these 3, only for 2, you can claim exemption, not for the 3rd. Are you with me? Are you with me? So what department say here is, read this along with me. The exemption referred to shall not be available to more than 2 surviving children of the individual after 1st October 1998. That means if you have a children which is born after, or you have many children which is born after 1st October 1998, out of those, you can take exemption only for 2. Are you all with me? Any 2 at your choice. You can take exemption. It is like that. Are you all here? Now, this restrictive sub-rule shall not apply in respect of children born before 1st October 1998 and also in the case of multiple birth after one child. What is that? Say, listen, in the same example, say, Ash have 5 children born before 1st October 1998. Then he have how many children after 3? Are you with me? Are you with me? Out of this 3, one son he had. After that, he had 2 twin daughters. One son and 2 twin daughters. That means, say, son born in 2000 and daughters, they born in 2005. Okay. So, the daughter's birth year was 2005 and son's birth year is 2000. Are you with me? So, the firstborn is son. Thereafter, he have a twins. Then no problem. After the first birth, that is after 1st October 1998, you have a child. After that, you have multiple. Multiple means twins, triplets, quads. I mean, okay. So, multiple means in one single birth, if it is twins or triplets. Okay. So, in that case, you can take all and claim exemption. This will not be a problem. Are you with me? What if the first birth itself is twins? Stop. Don't even think about anyone more. Okay. If the first itself is twins, then you will not get this benefit. After the firstborn, if it is twins or multiple, then you can take that multiple, all of them, and you can claim the exemption for the traveling cost. Are you with me? Are you with me? So we will read this note again. Can you read note number 3? This restrictive sub-rule for the 2 children restriction shall not apply in respect of children born before 1st October 1998 and also in the case of multiple birth after one child. You have a son, thereafter you have multiple, no problem. This restriction is not applicable. You can take all of them and claim the exemption. Is that clear? Now moving on to note number 4. Can you read note number 4? The value of travel concession provided to the High Court judge or Supreme Court judge and members of his family are completely exempted without any condition. Friends, give me a second, 1 second. Yeah, so listen, that is the impact of 31st July. Okay. You know what? What is the importance of 31st July? So since I'm not there, 31st July pressures are coming after 5. Normally it is like that. Till yesterday, I had regular session. So I'm available after 5:30. So I told all my clients to call me after 5:30. What happens is, I forgot to tell them that today I'm about to start my revision session and I'll be available only after 6:30. I forgot to tell them and people are keep on calling. No problem. I'll manage in between. Okay. So where were we? That High Court judges or Supreme Court judges, if you are giving any leave travel concession, that is fully exempted without any condition. If High Court judges have 10 children, take everyone. No problem. Okay, absolutely no restriction. It has been privilege given to the High Court and Supreme Court judges not to have 10 children. Okay. The privilege is they don't have any restriction. Okay. Yes. So, not number 5. What is not number 5? Exemption is available only if the journey is performed in India. You performed a foreign trip, no exemption. You first finish India, then go to overseas. Okay, so the exemption is not available if you are performed a foreign trip, and it applies only to the traveling cost. In a trip, you will be having food, then shopping, and other cost may come. Okay, so all other costs you will not get any exemption. Only for the traveling costs you can claim an exemption. Now, ticket cost, that's it. Incurred not for the other expenses like food, accommodation, shopping, etc. Incurred during the travel. Now you will think that you will get full exemption for the travel. The answer is no. For the travel cost also, there are certain ceiling limits. Now let's understand how do you claim the exemption. So friends, listen, point is simple. You are performing a journey within India with your family members. Are you with me? Are you with me? And who sponsors the travel? Either your employer sponsors that particular travel, or he reimburses that particular traveling cost. Either he sponsors it or he reimburses that particular traveling cost. Then what's the speciality? You can claim an exemption for the traveling cost alone, that too subjected to certain ceiling limits. That's what we are about to discuss. So what is the first box in that? Journey performed by air. What do you mean by journey performed by air? You took a flight. Okay, you took a flight. Then how do you claim exemption? Amount not exceeding the air economy fare of the national carrier by the shortest route to the place of destination. What does that mean? Listen, 2-3 things. You started your journey from Chennai. Okay, you started your journey from Chennai. You visited Bangalore. Then you go to Delhi. Then came back. So you had multiple destinations. Are you with me? Started from Chennai, went to Bangalore, then you visited Delhi and you came back. Are you with me? Then will you get exemption for all the traveling costs? No. You start from your destination and check which is the farthest point. What is farthest point? The far away. Okay, which is farthest point? Delhi. So the flight cost to Delhi and come back. That is the maximum exemption that you can claim. That too economy ticket, not any business class and all. Are you with me? Are you with me? Yes, so if you performed that particular journey through air, can you tell me how much is the exemption? Amount not exceeding the air economy fare of the national carrier by the shortest route. Shortest route means you start from the destination, beginning, till the farthest point, shortest route. You go to Delhi, come back. What exactly is the ticket cost? That only is allowable as a exemption. Are you with me? Now, what if you have performed that particular journey in any other mode? Say you have performed that particular journey in any other mode, then the first thing that you have to check is whether rail service is available. You tell me whether rail service is available from Chennai to Delhi. Yes, you have rail services from Chennai to Delhi. So you have performed the mode. Say you have gone in a bullet. You have gone in a bullet from Chennai to Delhi. So the first thing that you have to check is whether your place of origin and your farthest destination is covered by train. If the answer is yes, ignore the bullet petrol cost. Then you can take only what? Amount not exceeding air conditioned first class rail fare by the shortest route to the place of destination. That simply means you performed journey in a bullet from Chennai to Bangalore, then to Delhi, then you came back. How much is the maximum exemption? Check whether your origin and the farthest point is covered by train. The answer is yes. Delhi, Chennai, there is a train. In that case, what to do? You go check what exactly is the first class AC fare of the train ticket from Chennai to Delhi and coming back. That is the maximum exemption. The entire petrol cost and all, which is reimbursed by the employer, you will not get it as exemption. Are you with me? Are you with me? What if it is not serviced by, what if the rail service is not available? Say there is no service between Chennai and Delhi. Say there is no railway station in Delhi. Imagine a case, say Delhi, instead of Delhi, say I'm going to some other place, okay, in Tamil Nadu, where there is no train service. Then what to do? I performed the journey in bullet and there is no train service. Then what to do? If there is no train service, then you need to check whether a recognized public transport system exists. I think I performed journey from from Chennai to Kodaikanal. I think in Kodaikanal there is no railway station in my understanding. Come again? Dindikal. Okay, nearby railway station is Dindikal. So I performed a journey from Chennai to Kodaikanal. It is not serviced by rail. So what to do? You need to check whether there is a recognized public transport system from Chennai to Kodaikanal. What is this recognized public transport system? A properly licensed bus. The private taxi, you have to ignore, okay? There are people who runs as private taxi. You give something, they will drop you over there. If there is a recognized public transport system like a bus or a bus, that's it. Okay. So like a bus, then what you can take? The amount not exceeding the first class or deluxe class fare on such transport by the shortest route to the place of destination. That means from Chennai to Kodaikanal and coming back. What exactly is the best ticket cost? That is the maximum exemption. Who told you to go in bullet? Go by bus. Okay. Go by bus. That is the maximum exemption. Now, what if, this is the comedy, what if there is no recognized public transport system exists? You performed the journey in any other mode other than air. Okay. And there is no rail service. There is no recognized public transport system as well. You have gone to a forest. Satyamangalam forest. I think there, that Veerappan, that guy was there in the Satyamangalam forest, right? Yeah. So I've read it from somewhere. So you went to Satyamangalam forest. Okay. Is there any public transport system inside Satyamangalam forest? No. No. Then what to do? There is no flight. There is no train. There is no public transport system as well. Then it's a comedy. Then what is the maximum exception? This is the comedy. What is this? Amount equivalent to the air conditioned first class rail fare for the distance of journey by the shortest route as if the journey had been performed by rail. What is that? If you have performed your journey by rail, what could have been the railway ticket first class AC fare cost? That is the exemption. How do you find out that? You should call to the railway and ask, hello railway master, we know that there is no train service to Satyamangalam forest. What if in future, if you put a railway station over there, what might be the traveling cost? Can you ask like this? No. Then what to do? You go find out the nearest railway station. You cannot compute the cost by kilometer and all, because different train, different time, different cost. So what you can do is you find out the nearest railway station and what exactly is the traveling cost till that railway station and coming back. That is the exemption that you can claim. Are you with me? This is what we practically do. We cannot find out the traveling cost of a railway station that is about to come in future. Okay, in Satyamangalam forest, there won't be any railway station. Okay, whether it is future or past, there won't be any railway station. So we cannot find out that particular railway ticket. So you need to find out the nearest railway station and you consider that particular cost bus. Are you all with me? Are you all with me? National carrier means domestic flight. Domestic flight. Indigo, Spice Jet. Any flight. Yes. Let's say I travel to two places whose shortest distance from the place of origin is the same. Then you select one at your choice. That's it. Okay, you go with the tape. Okay. Then you select one out of two. That's it. Okay. Yeah. Constructing. Okay. Yeah. Don't worry. You select any one out of that two. One only can be claimed as an exemption. Mattuppetti. What is that? Muttupettai. Okay. Sorry. It's a place. Okay. Let's say, yeah. So, or you travel to a place called Attipetti. Okay. You go to Attipetti and coming back. That's citizen place. Yes. Forget about Attipetti. Think about leave travel concession. Okay. Now, coming back to the point. Friends, listen. Shh. Listen. So we were discussing about 10 subsection 5, that is exemption in respect of the leave travel concession. I hope it is clear. There are a lot of conditions in that. Okay. You should remember all the conditions because normally they used to ask, adjustments in relation to this particular exemption. Yeah. Come again. First. 2 out of 3. Yes. Because the act is very clear. If you want to claim the benefit, after the firstborn, it should be multiple. If the firstborn itself is triplets after 1st October 1998, only 2 out of 3. Yes. The possibility of having triplets is very less normally, but that's the rule. Okay. That is the rule. Okay. All right. So listen. We'll continue our discussion in the other things. So please keep quiet and listen. What is the next one? Medical facilities. Proviso to section 17, subsection 2. Now, friends, let me ask you one doubt and you should give me the answer. Okay. Say, for example, I am your employer and you are my employee. You have undergone a medical treatment. You have undergone what? A medical treatment. I sponsored that entire medical treatment. Or I reimbursed that entire medical treatment cost. Either I sponsored or I reimbursed. Are you with me? Are you with me? Yes, are you getting any benefit in this? Either I sponsored or I reimbursed your medical expenditure. Are you getting any benefit? Yes, you don't have to incur anything for your medical expenditure. Yes or no, you are getting a benefit. So it should be normally taxable. Yes or no? But department say all the following medical benefits are not taxable. Department say you don't have to value this perquisites. You don't have to value the perquisites which we are about to discuss right now. Are you with me? Apart from these, if you are getting any other medical benefit, then that will be fully taxable. Apart from the list that we are about to discuss, if you are getting any other medical benefit, then that will be fully taxable. Let's understand which all are the items coming under this particular table. So, sir, let's discuss related questions for 10 subsection 5. Don't worry. In the lengthy question, there are adjustments in relation to 10 subsection 5. So, anyways, wait till that, okay? So, let's complete the other things right now. Medical facilities, that is the following, will not amount to perquisite. Let's understand. Can you read the first one? Value of medical treatment in any hospital maintained by the employer. I myself have a hospital. And in that hospital, there is no bill for you. You can come, complete your treatment or undergo your treatment and go. There is no, I'm not charging anything for that. That is a fully exempted or fully not taxable perquisite. Are you with me? So can you read the other side? The value of any medical treatment provided to an employee or any member of his family in any hospital maintained by the employer shall be fully not taxable. See, because it is not an exemption basically. What they are saying is you don't have to value the perquisite. So rather than saying exemption, even though the effect is same, the correct way of saying is not taxable perquisite. Are you with me? Are you with me? They have been excluded this from the value of perquisite and now they are using the word family. And who is your family member for this purpose? Read. Family means spouse and children of the individual. Children may be dependent or independent, married or unmarried. It also includes parents, brothers and sisters of the individual if they are wholly or mainly depend upon him. That means the same as that we have discussed earlier. The parents, brothers and sisters will become your family members only if they depend on you for their living. Otherwise, you don't consider your parents, brothers and sisters. Are you with me? All right. What if you are undergone a treatment for your parent and your employer is reimbursing that? Or your employer allowing you to undergo treatment in his own hospital for your parent? Fully taxable. You will not get the benefit of exemption. Have you understood what I said? In a hospital owned by the employer, your parent have undergone a treatment, a medical treatment. All the bill, the value of the bill will be taxable in your hands because the parent is not a family member if he is independent. Are you with me? Are you with me? Because based on the PAN, you have to submit the details if they ask. Voluntarily, you file this. If they ask, you need to submit their PAN number. Based on that, department can know. If the parent has some other income, then he's not dependent. Dependent means financial dependence. That's it. If the parent have any other stable income, then department will say he is an independent person and you cannot claim the benefit for his treatment. This have to be voluntarily submit. You have to voluntarily admit it. Okay. But as you all know, most of the people in India, you know what happens when this comes to the theory versus practical. In all these reels and all, nowadays people are coming and talking how to convert your black money into white money and all. Day before yesterday only I saw a reel. Okay. The reel, the main subject is, let's convert black money to white money. What is happening in India, especially when it comes to the digital media, I really wonder, okay. Don't follow those jokers, okay. If you follow those jokers, you are done. Do you really think that their strategy to convert black money to white money will work? Hey, assessing officer pinni edukada? Don't think that assessing officer is dumb. Okay. And one more thing is there. Hope you have heard this. Barking dog never bites. This biting dog never bark also. If you know some strategy, you will go, apply it, save the taxes, go. That's it. Those people who are very good in this and who really know some strategy will never disclose it. Unless that situation demands for it. They will never open that camera. Hi guys, today let's convert some black into white. This is stupidity, okay? Don't follow those things, okay? Yes. So, and let's come back to the point, friends. So the first point, what we said is the value of any medical treatment provided to an employee or any member of his family in any hospital maintained by the employer. Now, can you read the second point? Reimbursement of expenditure actually incurred on medical treatment. These are not taxable, okay? Apart from this, whatever other medical treatment expenditure incurred by the employer or reimbursed by the employer shall be fully taxable. So we are discussing the list of exemptions. Are you all with me? We are discussing the list of exemptions. And can you read the second one? Reimbursement of expenditure actually incurred on medical treatment. And what is that? If medical expenses incurred by the employee for his treatment or treatment of any member of his family in any hospital maintained by the government or local authority or any other hospital approved by the government. You are incurring a treatment in government hospital. First of all, it is very cheap. Not free, small costs are there. For surgery and all, there will be some amount. If that some amount also reimbursed by the employer, then nothing shall be taxable. Are you with me? You are going and undergoing a treatment in either a government hospital or a hospital maintained by local authority. What is hospital maintained by local authority? Hospital which is owned by taluk hospitals or hospital under the corporation, under panchayat, that primary health center, etc. are the hospitals maintained by LA, local authority. Or a hospital approved by the government, then all the treatment costs shall be fully not taxable, or we can say exempted, no problem. Then what is the second bulleted point? In respect of prescribed diseases including illness relating to COVID-19 or ailments in any hospital approved by the principal chief commissioner or chief commissioner. That means, say you have some prescribed diseases like cancer, tumor, etc. You are undergoing a treatment in a hospital which is recommended or approved by the principal commissioner or chief commissioner of income tax. For that, your employer is reimbursing the amount or employer is sponsoring the amount. Nothing shall be taxable because we already know that you are in agony. You are having those kinds of diseases. You don't have money. That's why you are begging for your employer to pay the amount. Now, when he pay the amount, department says that, perquisite, okay, pay us the taxes. So that is very cruel. So no problem. You don't have to study which all are the prescribed diseases and all, like cancer, tumor, etc. So moving on to the third point. Can you read the third point? Premium paid to affect an insurance on the health of employee. What is the first point? Any premium paid or reimbursed by an employee to effect an insurance on the health of employee. Insurance scheme should be approved by the central government or IRDA. What is IRDA? Insurance Regulatory Development Authority. Very simple. Without IRDA approval, nobody can run an insurance business in India. If examination question they are saying it is an unapproved by IRDA, then not approved. Because it is the wish of examiner how to set the question. Okay. So in India, you cannot legally run an insurance business without the approval of IRDA. So all the insurance will be approved only. Are you with me? Are you with me? Yes, so what they are saying here is very simple. Say you have a health insurance. You have what? Health insurance. And who pays the premium? Employer. You are who? Employee. And your employer pays health insurance premium. In that case, you are getting a benefit. Why? Because you don't have to pay any premium. But no worries, that premium paid by your employer shall be fully not taxable. It is outside the scope of taxability. Are you with me? Now moving on to the next one. Can you read the last one under this? Read the last one. Amount paid towards expenditure incurred outside India on medical treatment. It is actually comedy, okay? Listen. You are undergoing a medical treatment which is overseas. You are planning to visit USA for your medical treatment. When you are going to USA, what all are the associated costs that may come? Traveling cost, then accommodation, then the medical expenses, the food, okay? Traveling, then accommodation, medical expenses. In accommodation, food also will come. Are you with me? All right. So department say, so you are taking one more person with you because you are going abroad. You have some illness and you don't want to go alone. You have taken one attendant. So for the attendant, what are the other costs incurred? No same cost. Medical expenses varadu. Okay. Except medical expense. Say attendant thought, anyways we are going to US. So let me also treat, okay. I have this, that and all. Appadiyella varadu, okay. So for the attendant, only traveling cost and accommodation. Are you with me? Every cost have been reimbursed by the employer. Assume everything is reimbursed by whom? By the employer. Let's understand how to claim the exemption or how to compute the taxable value out of it. So listen friends, amount paid towards expenditure incurred outside India on medical treatment. How to do? Number one, medical expenditure abroad incurred for the employee or member of his family, paid or reimbursed by the employer, is exempted to the extent permitted by Reserve Bank of India. Are you with me? First of all, if you want to undergo a treatment, you should transfer money from India to outside India. And that transfer is under FEMA. It is called as LRS. Hope you have studied that LRS. That is a new addition to your new syllabus as a part of your law. Liberalized remittance scheme. It is under FEMA. Are you all with me? Or don't worry, you will study that, okay? Or up to 250,000 US dollars. Indian rupees na onnu illa. Okay. Anga poi paathattu apdiye thirumbi vandadala. 250,000 US dollar you can transfer without any special approval. Forget about that. Forget about that. That is actually not a part of our syllabus and it was just explaining that, okay? So listen, very simple. You are planning to undergo treatment overseas. Either you being the employee or your member of household is planning for a overseas treatment. So what they are saying is medical expenditure abroad incurred for the employee or the member of family paid or reimbursed by the employer is exempted subject to the limit permitted by RBI. So in examination question, they will clearly mention what is the limit. You don't have to remember the LRS and you don't have to write anything. They will mention the limit. Are you with me? Say for example, you incurred 1 lakh. They are saying the limit is 70,000. Then you can claim exemption only up to 70. The rest 30 shall be taxable. Are you with me? What is the second item? Cost of stay abroad for the patient and one attendant or caretaker. That I've said. You are taking one along with you as an attendant or a caretaker. You are taking one more with you. No problem. Cost of stay abroad is exempted to the extent permitted by RBI. The cost of stay abroad, that means in the hospital you have to book a room. That definitely reimbursed by the employer is again exempted in your hands. And what is the third one? Cost of travel of the patient and one caretaker exempted only when the gross total income of the employee excluding this cost of travel perquisite does not exceed 2 lakh. What does that mean? Very simple. Practically, nobody will get the exemption for the cost of travel. Why? The condition what they are saying to claim the exemption for the cost of travel for you and for your relative. That means the attendant is what? Your GTI should be less than or equal to 2 lakh. GTI means gross total income. If your GTI is 2 lakh or less, then what is your designation in the company? The lowest level. No company will sponsor a lowest level employee to undergo a overseas treatment. Yes or no? Yes or no? Yes, so what department say is like, if you want to claim the cost of travel as an exemption, then your gross total income should be how much? 2 lakh. And for determining that GTI, don't add this cost of travel because you don't know whether that cost of travel is taxable or not taxable. Yes or no? For checking whether it is taxable or not taxable, we are determining whether it is 2 lakh or less. So for the time being, you exclude that and you compute your gross total income excluding that cost of travel. If the gross total income is more, then you add that also. You add that cost of travel as well to determine your total income. Is that clear? Is that clear? We'll solve a small question, okay? Because I understood. So don't worry. We'll solve a very small question. So I want all of you to read this question 12. Basic question it is. Your institute study material question only. Quickly solve this and give me the answer. Quickly solve this and give me the answer. India is not for beginners, sir. They, anti-national. India is for everyone, okay? Tomorrow's topics will be house property, maybe some part of the salary, remaining part of the salary, house property, PGP. PGP will not be able to complete, but maybe like this, something like this. അതെയല്ലോ, I am from Ernakulam. Yes, I'm a Malayali. I am from Ernakulam, Kerala. Yes, 39,000. So I'm getting some answers. How about you? Ready with the answer? Ready with the answer? Yeah. So let's see. Yeah, I'm getting answers. Very good. Nursing home? No, no, no. Nursing home means just like a private hospital, okay? Yes. So listen. What is the first one? Medical premium paid for ensuring the health of Mr. G. Who's Mr. G? He is the employee because from his employer, that's what the question says, okay? So that is exempted. Nothing shall be taxable. What is the assumption? IRD approved insurance only. Are you with me? Are you with me? What is number 2? Treatment of Mr. G by his family doctor, taxable. Taxable. Then, treatment of Mrs. G in government hospital. Mrs. G, family member, government hospital, exempted. Then, treatment of Mr. G's grandfather, taxable. Why? Because grandfather is not your family member. அப்படி இல்லை. Grandfather, according to the income tax law, is not your family member. She was saying, no, sir. Don't worry. No. Moving on to the next one. Treatment of Mr. G's mother by family doctor. What to do? Family doctor, fully taxable. Fully taxable. You cannot claim the benefit of exemption. You cannot claim the benefit of exemption. So we can say taxable. Then, what is next? Treatment of Mr. G's sister, dependent, in a nursing home. Definitely taxable. Nursing home means it's just like a private hospital. Okay, fully taxable. Then, treatment of Mr. G's brother, independent, taxable. Why? They are saying independent, hence it is fully taxable. Then, what is next? Treatment of Mr. G's father, 75 years and dependent abroad. Expenses of staying abroad of the patient and limit specified by RBI is 75,000. So limit is there. So these two together outside India they have expended 80. Limit specified by RBI is 75, and hence how much is exempted? 75 is exempted and the rest 5,000 is taxable. Are you with me? Now how much is taxable total? 5 plus 12 plus 8 plus 3 plus 6 plus 5. That is 39,000 is the taxable perquisite. Oh, sorry. 39,000 is the taxable perquisite. I hope most of you might got the right answers. Are you all with me? Are you all with me? Sir, in exam, just taxable income, just submit or give notes. Of course, you have to write detailed notes, okay? Since it is a revision session only, I am writing it like this. Of course, you have to write notes in detail. Why taxable, why not taxable? In one sentence, you have to write the reason, okay? Ragul, hope you understood. You have to write notes for every adjustment because each adjustment carries a mark, okay? Yeah. So, let's move on, friends. Dependent or independent family member is a bit confusing. No, nothing confusing. Only 3 persons. Father, mother, brother, sister. Dependent, family member. Independent, not family member. Spouse and children, always family member. Whether they are dependent or independent. What is the point of confusion? Is it confusing? As is nothing. Okay, if you think it's confusing, then it's confusing. If you think it's nothing, suppa matter. Okay. Yeah. So moving on, friends, moving on with the next one. That is valuation of, this is another important item, that is valuation of residential accommodation. Let's understand what exactly is the valuation of residential accommodation. Are you all listening? The chances of asking this is very, very high. Why? Because there is a new change in this. Income tax department came up with an amendment with effect from 1st September 2023. The problem here is you have to study both the old as well as new amended thing, because your previous year is from 23-24. Starts with 1st April 2023 and ends with 31st March 2024. This amendment is with effect from 1st September 2023. That means half the year, not half the year, the first 5 months old. From September to March, new. Are you with me? Institute study material have been printed on, I think, February or something. February 2023 or January 2023 or something. So, this had not been incorporated, but in the e-book, that means electronic book, I think they have updated this. In the physical book that you have, which is printed on January 2024, I think most of the printed books, they haven't included this. But if you download the e-book from the BOS portal, you can see this new amendment because this came effect very lately. That's why. Are you all with me? Are you all with me? Let's understand how to value the rent-free accommodation. Soon after finishing this, I'll let you go. Okay? Yes. Soon after finishing this, I'll let you go. Don't worry. It's just 6:20. Okay. Yeah. So let's understand what exactly is this point. So friends, what do you mean by rent-free accommodation? Rent-free accommodation. Either the employer will provide me a house or the employer will reimburse my rent. That is said to be rent-free accommodation. If I'm getting a rent-free accommodation, am I getting any benefit? Of course, yes. I don't have to buy a house or I don't have to pay any rent. I'm of course getting a benefit. If I'm getting a benefit on account of employer-employee relationship, then we should tax that benefit as perquisite. Are you with me? If I'm getting a benefit on account of employer-employee relationship, then we should tax that particular benefit as what, friends? Perquisite. And that's what we are about to discuss right now. So rent-free accommodation can be divided into two. First one is unfurnished accommodation. What is unfurnished accommodation? Only the building, fan, light is there and structure is there. There is no furniture like table, chair, electronics, etc. is not there. Are you all with me? So if the core building along with the fan and lights is not considered as furniture, only the basic building is there without any furniture, then we will call it as UFA, unfurnished accommodation. If the house provided to you have all the amenities, or it has bed, it has TV, fridge, washing machine, etc., then we can say it as a furnished accommodation. So we will value both the UFA and FA, that is furnished accommodation and unfurnished accommodation. First, let's learn how to value the perquisite in relation to unfurnished accommodation. So under that, what is the first one? You check whether you are a government employee. Are you all with me? Are you all with me? If you are a government employee, then how do you value this unfurnished accommodation? Very simple. You need to determine the license fee determined by the government minus rent payable by the employee. What do you mean by license fee? License fee is just like an annual rent. The government will have a valuation that is called as license fee. Based on your designation, you will get a house with a higher license fee. Say for example, if you think about police, the DGP will get a house which have a higher license fee, just like an annual value. And the SI will get comparatively lower lower annual value house. So instead of saying annual value, the government is using the word license fee. Hope you have seen that government quarters. Have you seen government quarters? And every quarters will have a license value, just like an annual value of a property. That annual value is your taxable perquisite minus rent defini payable by the employee. If you are paying some rent, then you can deduct that. Are you with me? What if the annual value is less compared to the rent? Say annual value is 1 lakh and you pay 1,10,000 as rent every year. Then what to do? Nothing taxable. That's it. Don't claim any deduction and all. Are you with me? Are you with me? If the annual value, that means license fee of a property is 1 lakh and the rent paid by the employee is 1,10,000, you are not getting any benefit because you are paying more than the annual value. And hence nothing shall be taxable and you cannot claim that 10,000 as a deduction and all. Are you all here? The question is whether it is taxable. The answer is no. Now, moving on to the next one, friends. So if you are a government employee, then the license fee determined by the government minus the rent payable by the employee shall be taxable. What if you are a non-government employee? What do you mean by non-government employee? Other private sector employees. Okay. If you are a private sector employee, then you need to check whether the house is owned by the employer. That means employer have a house. He have given that particular house to you and you are staying in that particular house. In that case, how to value? The valuation of the house depends upon the population of the city where the house is situated. Are you all listening? Are you all listening? If the employer has given a house, then the valuation of the house depends upon the population of the city where the house is situated. So let's understand how to value that particular thing. Can you read the first box? Is more than 25 lakhs. Say the population of the city where the house is situated is more than 25 lakhs. Then how to value? 15% of the salary shall be the value of perquisite. There is no other method. So department comes up with an equation. What is an equation? If the house where you are residing is situated in a city where the population is more than 25 lakhs. Okay, then what to do? You compute the salary and 15% of that salary shall be the taxable value of the perquisite. It's just an equation, okay? And how do you compute salary? Because there is a separate definition for the salary over here. Where is the definition? I think that definition is missing. Don't worry. I'll make you write that definition, okay? I accidentally skipped that definition when I prepared this notes. Don't worry. I'll make you write that particular definition once we complete this. So there's a definition for the salary. It's not standard salary. We have a separate definition for that. Are you all listening? Are you all listening? Great. Now, listen. Say, what is the point number 2? If the population of the city where the house is situated is less than or equal to 10, more than 10, but less than or equal to 25. It is more than 10, but less than or equal to 25 lakhs. Then, how do you value? 10% of the salary. What if the population of the city where the house is situated is less than 10 lakhs? Then how do you value? You have to add less than or equal to 10, okay? Less than or equal to 10 lakhs. Then how do you value? 7.5% of the salary shall be the taxable perquisite. So listen friends, listen. Very simple, very simple. If the house is owned by the employer and the house is in a city where the population of the city is more than 25 lakhs. How do you value perk? 15% of your salary. Are you with me? Take the annual salary, apply 15%. And for that salary have a separate definition that we will cover later. You take the annual salary, apply 15% and that will be the taxable value of perquisite. What if the population of the city where your house is situated is more than 10 but less than or equal to 25 lakhs? Instead of 15 it is 10%. What if the population of city is less than or equal to 10 lakhs? 7.5% of the salary. Are you with me? But there is a problem. What is the problem? A new amendment came and that amendment is with effect from 1st September 2023. The CBDT has widened these notifications, substituted Rule 3.1 to specify the manner for determining the value of residential accommodation provided by the employer during the previous year. And what is the new manner? Where accommodation is provided by any other employer, that means other than government employer, then where the accommodation is owned by the employer, how do you value the perk? You check whether the population of the city is more than 40 lakhs. If yes, then percentage is 10%. If the population is more than 15 but less than or equal to 40, then 7.5%. In other case means what? Less than or equal to 15 lakh population, not 18, okay? 15 lakh population, then 5% of the salary. But the problem is, your PY starts from 1st April 2023 and it ends with 31st March 2024. Yes or no? In this period, only with effect from 1st September 23, this new rule is there. With effect from 1st September 23 only, this new rule is effective. Then what to do? When you compute the perquisite value, first of all, you compute the salary from April, May, June, July, August. Till August, 5 months, salary into, if the population of the city is more than 25, 15%. Are you with me? With effect from 1st September. That means September, October, November, December, Jan, Feb, March. That means 7 months. How to compute? Check the population whether it exceeds 40, then 10% of the salary. Whether the population exceeds 15 lakh, then 7.5% of the salary. If the population is less than or equal to less than or equal to 15 lakhs, then 5% of the salary. You have to split. Annual salary have to be splitted into first 5 months salary. Then apply that 15, 10, 7.5. Then next 7 months, apply that 10, 7.5, 5%. Depends upon the population. Is that clear? Is that clear? You have to do 2 calculations. Only for this year. Because from next year, if the previous year getting updated, then what will happen? Only the new rule is there. Old rule you don't have to study. Really unfortunate. You have to study both for 23, 24 previous year. Are you with me? Are you with me? Yes. So this is how you have to compute. Yes. Salary definition has been given over here. Salary is equal to basic salary plus dearness allowance, forms of retirement benefit plus commission, bonus, taxable portion of allowance. Excellent. That is the correct definition for salary over here. Don't worry. We will discuss that. Okay. Somebody have already typed it in chat. Okay. Thank you. Yes. So that it is easy for me. Yeah. Don't worry. I will make you right. Okay. Yes. So this is how you have to compute the thing. Are you all with me? Are you all with me? Now you tell me, what if that property is taken on lease or rent? What if the property is taken on lease or rent? You need to check whether where the accommodation is provided in a hotel. Are you all with me? You need to check whether the accommodation is provided in a hotel. Irrespective of the fact that whether you are a government employee or non-government employee, if the accommodation is provided in hotel, how to value the perquisite? Read. Lower of 24% of the salary paid or payable or the actual charges payable to such hotel, whichever is lower. Either 24% of the salary or actual hotel bill, whichever is lower, shall be the taxable value of perquisite. There is no amendment for this. Is that clear? There is no amendment for this. So whether you are staying in a hotel for before 1st September or after 1st September, there is absolutely no change in this particular thing. It will be always either 24% of the salary or actual hotel bill, whichever is lower for a year. Are you with me? Now, how do you value the perquisite in other cases? What do you mean by other cases? Other rented house. If it is a proper home, then how do you value? Can you read this box? Hello, read it properly. Lower of what is that bracket? As reduced by the rent payable by the employee. That is always there. If you are paying something, then you have to net it off. If you means if the employee pays something to the employer for the benefit that he accepted, then you have to always net it off. Are you with me? So, in the other case, if the house is rented, that means if it is a proper rented house, then how do you value the perk? Lower of 15% of the salary or rent paid by the employer, and you have to reduce the actual recovery from the employee, but there is an amendment also. What is that amendment? Read this part B. Where accommodation is taken on lease or rent by the employer. You can write other than hotel. Other than hotel. Whether the accommodation is provided either where the accommodation is taken on lease or rent by the employer, other than hotel, then you tell me how do you value the perk? Actual amount of lease rental paid or payable by the employer or 10% of salary, whichever is lower. What is the difference then? Instead of 15%, the limit they reduced it to 10%. That's it. There is no other difference. But when you compute it in exam, till April to August, it is 15%. From September to March, it is 10%. Depends upon how the question is. Say, for example, the employee is getting a benefit from 1st January 2024. If they say, only apply the new law. Are you with me? If the question is for throughout the year, then split that into 2 and compute the perquisite. Are you with me? Are you with me? Not yet over. We have completed only what? Unfurnished accommodation. Now you have to furnish the accommodation. Yes or no? Let's understand how to value the perquisite of furnished accommodation. We have time. Okay, don't worry. So let's complete the furnished accommodation and let's complete the other things in relation to this. Thereafter, we will think about discussing other things. Okay. Yes. So furnished accommodation. Let's understand how to value the perquisite of furnished accommodation. So tell me, very simple. Furnished accommodation, you can do it in a very simple manner. First, you value the unfurnished accommodation. Then add the value of furniture. Done. Whether it is furnished or not furnished, there is a structure. Yes or no? So if it is a furnished accommodation, then what to do? Taxable value of unfurnished accommodation. How do you value unfurnished accommodation? That's what we have learned in the other side. Are you all here? So you compute the taxable value of unfurnished accommodation, then add 10% of the original cost of furniture if owned by the employer. Employer bought a washing machine worth 1 lakh and it has been provided in the house given to the employee. For the whole year, take the 1 lakh worth furniture. Take that, 1 lakh worth washing machine. What I said, washing machine or furniture? Whatever it is. Take that 1 lakh worth asset. Then into 10% for every year. That's it. So 1 lakh into 10%, that will be 10,000. You compute the UFA at 10,000 for a year for that furniture or washing machine or whatever it is. Are you all with me? What if employer took that washing machine on lease? Employer took that washing machine on lease, then higher charges. The higher charges you have to add to compute the value of furnished accommodation, and there is no amendment in this. Not yet over, da. Not yet over. Close pannade. Okay. Not yet over. Are you all with me? Are you all with me? Now I want all of you to write the definition of salary over here. I missed that. Okay. So I'll write it here. I want all of you to take a copy of the definition of the salary. Thereafter, we will solve a small question. Okay. Because since there is an amendment and your institute study material also have done the question in the old manner. So I'll make you solve a very small question. Okay. Very small. Maximum we'll take half an hour. Chumma sunna. Okay. Maximum 35 minutes is more than enough. All right. So let's write the definition. So wherever space is there, So I have some space over here. The same material has been printed to you. Okay. So you also should have some space over here. Yes. Sir, time's up. Okay, Kanna. So they have set some timer and all. Don't worry. So yeah. So please write. Salary means basic salary plus DA forms part of retirement benefit. RB means what, friends? Retirement benefit plus taxable allowances plus bonus plus commission excluding perquisites and excluding employer's contribution to PF. Employer's contribution to PF, Provident Fund. This is the definition for salary for the purpose of computing RFA, rent-free accommodation. Basic salary plus DA forms out of the retirement benefit plus taxable allowance plus bonus plus commission excluding perquisites and excluding employer's contribution to the provident fund. Whether it's taxable or not taxable, you can exclude these two items. Okay. Yes. Now let's solve a very small question and I'll let you go. Okay. Have you completed this definition? Online friends, have you all completed this? So friends, you have to, for that, you have to talk to the, I don't have an access to your group, okay? So you have to talk to the KSA team. They will make the arrangements. Yeah. So listen. We will solve a small question which is not there in your sheet, okay? Because in the sheet I have only put some lengthy questions. November. Okay, solve question 13. Solve this question 13. Read this question. It's an easy question only, okay? It's an easy question only. It's a very small question. So we'll solve 14 also. Very small question, okay? We'll complete 13 and 14. Hello, it's only one question, okay? Read question 14 using the data in question 13. So it is actually a sub-question of question 13. It's only one question, that's it. 14 is a sub-question. Do 14 also. That's also done. 14 also done. 14 also done. The continuation of that. Yes, I'm getting answers. Very good. Have you all completed? No. Okay, don't worry. Yeah. So friends, let's solve it together. Listen. Mr. C is a finance manager in ABC Limited. The company has provided him with rent-free, unfurnished accommodation in Mumbai. He gives you the following particulars. So the company has provided means what? Who owns the house? Who owns the house? Employer. Okay. Now it is in Mumbai. So what is the population of Mumbai? More than 40. Okay. More than 40 anyways. That actually we also don't know. Because India last preceding census was in 2011. So nobody knows what is the population of the cities in India right now. So it is a chaos actually. So what I can tell you is, if the city looks like a populated city like Chennai, Mumbai, Hyderabad and all, they say you assume that it is more than 40. Are you with me? I think in November 23, they have created a question and they said Hyderabad or something. Okay. They asked Hyderabad or something without giving the population. So assume it is more than 40. At that time, it was more than 25. Are you with me? Are you with me? Yes. So let's see, it's Mumbai. So basic salary is there, DA is there, bonus is there. How do you value the perk? Compute the salary and apply the rates that we have learned. Now, even though the company allotted the house on 1st April 23, he occupied the same only from 1st November. Let me ask you one doubt. Do you have to value the perquisite for the whole year or only from 1st November? 1st November. It's not related to the allotment. It's all about whether you started enjoying it. Are you with me? So from November onwards, how much is the salary? Basic salary you have to consider. DA's 30% is for the retirement benefit. How much is 30% of 2,000? 600 rupees. Then bonus you have to consider 1,500. So how much will be the salary? 6,000 plus 600 plus 1,500 into November, December, January, February, March, 5 months. It will be 40,500 will be the salary into what is the percentage that you have to apply? 10% because the period is on when? November. That is after September 2023. So into 10% that will be 40,50. 40,000. Sorry. 4,050. Are you with me? Are you with me? Can you read question 14 and solve that also? Like it's a continuation of this question. Okay. Read that and give me the answer. After that we'll leave. Okay. Yes. Very good. Very good. A lot of answers that I'm getting. Excellent. Yeah. Okay. Okay. Wow. Understood. Understood. Chat box. And what is the difference in question 14? Assume it is a property taken on lease. Are you with me? Are you with me? If it is lease, then how do you compute the perk? 1,200 into 5 months is the lease rent. How much is 1,200 into 5 months? How much is that? 6,000 rupees. Or what is the second one? 10% of the salary for that 5 months. How much is 10% of the salary for that 5 months? 4,050. So 4,050, whichever is lower. Which is lower? 4,050, not yet over, but you are paying how much to the employer? 1,000 per month you are paying to the employer. So you tell me, how do you value that? 1,000 per month means 1,000 into 5 months. That will be 5,000 and nothing shall be taxable. Why? Because you are not getting any benefit. You are paying more than required according to the income tax law. Don't claim it as a loss and all. Okay. So 4,050 minus 5,000, you have to write nil. Nothing shall be taxable. Is that clear? Is that clear? Online friends, please respond. Is that clear for you? They online da. Yes. Yes. Superb. Superb. So that's all for the day. And we will be continuing our firing tomorrow. Okay. So from tomorrow, what's the time? 8:30, right? So sharp 8:30, please be on time because we'll be starting at exactly 8:30 onwards. So take care, friends. See you tomorrow and bye-bye. Okay, one second. In exam, the question is not specified about follow the new. Oh, no. Whether the question says whether you follow old or new, you have to follow. Depends upon the date. Okay. Ali Nawaz, whether the examiner telling you to follow or not follow, you have to mandatorily follow, depends upon the date. Less than 15. Yeah, I'll show the table. Don't worry. Less than 15, it is, as per the new law, it is 5% of the salary. As per the new law, it is 5% of the salary. How 10% means? It's from November, okay? It's from November. Leasehold property, according to the new law, it is 10% of the salary or actual amount of lease, whichever is lower. No. Whether you write the note or not depends upon the date. You have to write the answer. Good. Yeah, don't worry. We will. I'll give you tips on the last day. Okay. PDF. You ask the KSA team. They will make the arrangement. Nothing means why nothing? Because see, lease rental was 1,200 into 5, 6,000. Okay. And value of the property, 10% of the property, that means 10% salaries we have already computed, that is 4,050. Whichever is lower, that means 4,050 minus rent paid. Rent paid is 1,000 per month in the question. So 1,000 per month into 5 months. That will be rent paid as 5,000. So the value is 4,050 and the rent paid by you is 5,000. So it is a kind of a loss. So nothing shall be taxable. USB cable. Okay, I thought you were asking something in relation to income tax. I was checking that. What is this? Okay, sorry. I didn't understand that. All right, friends. So see you tomorrow. Take care and bye bye.